Hey, dough rollers, welcome back to the Dough Roller Money Podcast. My name is Rob Berger. This is episode 361. We're going to cover three things. First, we're going to take a look at the whole Binance fiasco and the SEC's lawsuit, and more, in some ways more important, their attempt to freeze assets of Binance, the U.S. Binance company. So we're going to talk about that. Then we're going to look at actually Marriott credit cards. They've just for a short period of time upped their welcome offer, the bonus you get if you sign up for one of their cards. The bonuses now, depending on which card you get, are worth potentially over $1,000. Going to share that with you, and then I'm going to share with you a story, a conversation that I had with a good friend about what do you do. Imagine you're in or near retirement. You've got your retirement money you've saved, but you find yourself having to manage those investments for the very first time, and you don't know what to do. And you're understandably, you're nervous about it. You don't know who to trust. You're not sure you could do it on your own. What do you do? And I'm going to share sort of the advice I gave this good friend of mine. So that's what we're going to do today. So let's jump right in. So to understand Binance and this situation, and by the way, I think the issues implicated here are important, even if you don't have a Binance account, and even if you don't invest in crypto. I don't own any crypto, but I think it's really important. But part of the story really has to go back to FTX. Remember, that was the whole debacle there with Sam Bankman-Fried, and it's a criminal case there. And the allegations among, there are many, but sort of the crux of the matter is that there was this, FTX brokerage where they took in client money, in some ways not unlike any broker, Fidelity, Vanguard, Schwab. And you're supposed to do certain things with the money, and there's a lot of things you're not supposed to do with the money as a broker. Now, of course, FTX wasn't in the United States, right? It was headquartered in the Bahamas, if I remember correctly. But the allegations are that Sam Bankman-Fried and perhaps others took client money and did inappropriate things with it, basically funneled it to one of his own hedge funds, and then lost a bunch of it. And you might say, okay, Rob, that's FTX. What's that got to do with Binance? Well, my sense from reading the complaint, and I'll show it to you in a minute for those that are watching the podcast on YouTube, you'll see it here in just a minute. I think part of what the SEC is doing is saying, what happened with FTX, we may not have been able to stop that, but it's not going to happen with Binance, not on our watch. And so they filed a complaint and a motion to basically freeze assets here in the United States and to repatriate, bring back assets that they allege were sent overseas. So here's the complaint. Now, it's only 136 pages, so a quick read, right? So when I was a trial lawyer, most of my cases were in federal court, and I had many in this court, the United States District Court for the District of Columbia. In fact, the very first motion for summary judgment that I won was in this court before Judge Norma Holloway Johnson, I believe, if I remember correctly. It was only like 25 years ago. Anyway, I've drafted complaints like this, I'm sorry to say. But the real thing that I want to focus on is actually not this complaint. Here's the complaint, but what they also filed was this motion. Plaintiff, U.S. Securities and Exchange Commission's emergency motion for a temporary restraining order freezing assets and granting other relief. It's against Binance Holdings, BAM Trading, and related entities, and the CEO, CZ. And so what's going on here? Why do they want to freeze assets? And when you file a motion like this in federal court, you also file a memorandum of law. It's a brief. It says, okay, here's my motion. Here's what I want you to do, court. I want you to freeze assets and grant us other relief. The memorandum of law explains why, the basis. What's the factual and legal basis for our request? And let me show you what that looks like. Here it is. This is 67 pages long. And there's a lot going on in here, but I want to focus on just one thing, and that is this idea that CZ, the CEO of Binance, this idea that he doesn't really care about regulations. He doesn't want to be regulated. He wants to skirt regulations. These are allegations, right? Don't know if they're true or not. But that's effectively what the SEC is alleging, and that money has left the U.S. and gone overseas, and they want to freeze assets and repatriate or bring assets back into the United States, and under the court's control, so that there can be no funny business. And I'm going to show you just a couple of pieces of evidence that they have that I found interesting in just a minute. But here's the thing that I think we all need to know, whether we have a Binance account or a crypto account or not. What happens when you invest money or you deposit money into a broker? You have your retirement account at Fidelity. You have a taxable brokerage account at Vanguard or Schwab. What happens with that money? And I think the important thing to understand is what happens when you deposit money in a brokerage account is very, very different than what happens when you deposit money in a bank account, like a checking or savings or a CD. When you deposit money in a bank account, that money belongs to the bank. It's on their balance sheet. They own it. It's their money. Thank you, Rob, for depositing $500 into the checking account at Chase, we'll say. It's our money now. And we don't have to keep it separate with just your name on it. I mean, we have an account. We know you deposited $500. We have an accounting system that tells us that, and any interest you might earn or fees you might pay. We keep track of it all. Don't worry about that. But it's our money, and subject, of course, to regulations, we can invest that money. We can make car loans, business loans, mortgages. We can lend money to the U.S. government by buying treasuries. Now, of course, they have a contractual obligation, legal obligation to give me my money back when I want it, but they can invest it. And it's all, commingled, if you will, with all the other deposits that they get. Now, of course, you might say, well, that's scary. What if they make bad investments and lose a lot of money and go under, like SVB did not long ago? Well, that's okay, right? Well, it might not be okay, but we're protected because we have FDIC insurance, right? That's the safety valve. That's okay. And it doesn't matter how big the bank is. If it's a member of the FDIC or NCUA for a credit union, we've got our $250,000 in FDIC insurance. And so that's what helps us feel comfortable using the banking system in the United States. All right. Well, with a broker, it's very different. When you deposit money into a brokerage account, the broker can't take your money and do with it what it pleases. It can't say, oh, thank you very much for that money. And just like Chase Bank, we're going to use your money, Rob, to lend to the U.S. government and buy treasuries or to make a car loan. No. You don't have that kind of control over a client's money in a brokerage account. In fact, you have to keep it separate, and you can only do with that money what the client tells you to do with that money. So if I say, okay, take my money and put it, and I want to buy a Vanguard ETF, that's what they have to do. Or if I say, no, I want to buy a treasury in my name, it's mine, that's what they have to do. They can't take that money and commingle it with their own and invest it how they please. Now, that can be good news for us, right? Because if a broker goes bankrupt, assuming no funny business, if a broker goes bankrupt and their creditors come after all their assets and they see my account or your account and they say, hey, we want that money too, the bankruptcy court would say, you're confused, creditor, because that money doesn't belong to the broker. That money belongs to the individuals who has the account. You don't have access to it. Sorry, it's off limits. The big risk for an investor is what? In a brokerage account, it's fraud, right? So we can think of examples. Bernie Madoff, right? There's a perfect example of fraud where a lot of investors lost a lot of money. FTX very well could be another example where, at least allegedly, the company, the CEO, was, doing funny business with clients' accounts. Well, that's the allegation with Binance, as I understand it, that money may have left some of these accounts. What's going on with the money at Binance? And let me just show you a couple of examples. We're going to go down to page 25. Oh, no, we're going to start with page 14, actually, of this memorandum of law. I like this quote. They're talking about, I guess it's Zhao, but it's CZ. It says CZ and Binance understood that they were operating the Binance.com platform in violation of numerous U.S. laws, including federal securities laws. And I like this quote. In December of 2018, Binance's CCO admitted this fact in a communication with another compliance officer, stating, quote, "We are operating as a effing unlicensed securities exchange in the USA, bro." You just, as a lawyer, you would love to be able to put the word effing in a court filing. There's just nothing that makes you happier than to doing that. So that's not exactly good for Binance. And then one other thing I'll show you, it kind of starts around page 25, and it sort of walks through this idea of money leaving the US in some weird ways. Here's one example. There's this company name called Marriott Peak, which somehow CZ was associated with. And it received over $22 billion in funds. And it said these funds consisted in significant part of Binance Platform's customers' assets, including those of Binance US platform customers and other sources. In total, Marriott Peak received approximately $11 billion in Binance.com platform customer funds through another entity that was created to accept these deposits, and it goes on and on and on. These are very, very serious allegations. It's one of the reasons that when I pick a broker, I want to pick a well-known, heavily regulated U.S. broker, particularly one that doesn't brag about trying to skirt U.S. regulations. That would be a showstopper for me. My money wouldn't go to that kind of broker. Now, of course, what I've just read from you is from the SEC complaint and their motion for an asset freeze. They're allegations. Maybe they're not true, right? Maybe, I don't know. I guess we'll find out, right? I can tell you this. If I owned crypto, and I don't, I would not have it at any Binance-related entity. If I were going to own crypto today, I would probably own it at Coinbase. By the way, they have their own SEC issues, although they're of a very different kind. They're of allegation of selling unregistered securities, which, by the way, is part of the complaint against Binance as well. But that's very different than this idea that customer assets are being funneled, into other entities, which is exactly the allegation at FTX. It appears to be the allegation with some Binance-related entities. Again, whether it's true or not, I have no idea. I'm just reading you the complaint and the memorandum of law filed by the SEC. We'll see what happens as the case unfolds. But I wanted to share this with you. There is still a lot of trust involved at a brokerage. I'm not concerned about the broker going bankrupt because the creditors would not have any rights to my assets. Fraud, though, that's another matter. And so you really want to be confident in the brokers you're using. And and that's true whether you're talking about your retirement funds or crypto. So what you do if you have a Binance account, of course, that's up to you. I can tell you I would not have any assets at Binance based not only on this, but also I've watched some interviews of CZ, and I didn't get a warm, comfortable feeling from the interviews that this was someone that was, that I would personally trust my money with, whether it's in the form of crypto or not. So there you go. That's sort of a very high level, quick overview of what's going on at Binance. Let's get to number two. This just came through. So Marriott has a number of credit cards, and they all have these sort of welcome offers. You sign up, you get the credit card, you spend a certain amount of money and a certain amount of time, you get some sort of, in this case, Marriott Bonvoy points. And what a lot of the cards do for short periods of time, they'll significantly increase what you get. So let me just show you that briefly. And there are two cards I'm going to show you. This is the Bonvoy Brilliant. You can see you get 150,000 bonus points. You got to spend 6,000 on the card in the first 6 months. You can earn 50,000 additional Bonvoy points if you stay 6 eligible nights at a participating Bonvoy property by next January. So this is pretty significant. It didn't quite double. I'm trying to think what it was before they just raised it. It might have been 80,000. I can't remember now. But this is a significant jump. From what I've read, a Bonvoy point's worth between about 0.7 and 0.9 cents. So I would put this at these bonus points at roughly 1,050. Now, you can see there's a big annual fee. So obviously, if you got the welcome offer, it would pay for that maybe 1.5 years of this card. To me, this card only makes sense if you stay at a Marriott a lot throughout the year. If you stay at Marriott, but maybe not a lot, then the other one is the Bonvoy Bevy. It's a step down, but still a very good card. You get 125,000 points, and then you've still got this same 50,000 point offer, but the annual fee is a lot lower. Now, one thing about both of these cards is you do get status. So I think for this card, you get gold status. Let me just look at this real quick. I'll pull this up. I'll show you the chart. Here it is. If my internet would work, I could show this to you right now. Here we go. So they have, I think you get gold for the Bonvoy Bevy, which gives you 2 p.m. late checkout and some other things. You get platinum, which is a few more bonus points and whatnot for the Brilliant. So I wanted to share those with you. I'll leave links below the video and in the show notes to the podcast. One thing I'm considering, by the way, is actually the American Express Platinum card, which has a big annual fee as well, $695. The thing about the card, though, is they come with credits. It comes with credits that more or less pay the annual fee, I think. A hotel, airline, there's a digital, like a streaming credit, an Uber Eats credit. So you could probably get back your annual fee just with the credits. But the thing that I like about it is actually not the rewards. There's a welcome offer, bonus reward, and whatnot. But it's the status. So you actually get, with that card, you get Marriott and Hilton gold status automatically. And so for that reason, and then of course you get good access to lounges and airports. That actually, for me, might be better than, say, a Marriott card. But of course, just depends on where you stay, how often you stay at a Marriott, what's best for you. So we tend to sort of stay at a Marriott or a Hilton, just depending on location and price. And so we're not sort of wedded to any one hotel brand, but you might be. And if Marriott is your jam, then check out those cards. The bonuses, they end early August, and they'll go back down to their whatever they normally are. So there you go. All right. The third thing I want to talk about, but this is a lot for one podcast, it is, I had a conversation with a good friend, and I've had many conversations like this, where, and the circumstances can be a little different, but it's often where they're in retirement, or they're about to retire. Maybe they've got a 401k, and it kind of just seemed to take care of itself, but they're going to move it into an IRA. And that could be a little nerve-wracking. You could be talking a 6 or certainly 7 figures going into an IRA. It's there in cash. What do you do? I mean, you may have been investing throughout your working years, but now when you're looking at this brand new IRA and $1 million in it or whatever, what do I do? Or I have some friends that are at a big, investment advisor firm. It's kind of comfortable, but they know the fees are ridiculous. The fees are like 1%, plus they've got them in expensive mutual funds potentially. What do they do? And they're not comfortable doing it on their own. So here's what I tell friends that come to me like that. And I just had this conversation with a good friend yesterday. I said, my recommendation, and this is what I would recommend to my wife if she had to, if I got hit by a bus, God forbid, and she had to do this all on her own, this is what I would tell her to do. The first thing I would do is I would say, work with Mark Zorel at Plan Vision. Now, longtime listeners of the show know who that is. If you're newer, you don't. Let me first say, I have no financial relationship with his company or him, Plan Vision. And I'll show you, for those watching on the YouTube channel, this is Mark right here, and I'll just show you his website. I have no financial incentive at all. He doesn't even know I'm talking about him today in today's show. But here's the deal. The first year is $239. That's the total cost. Now let's think about that. If you had $1 million and you hired your typical traditional investment advisor that charged you 1%, your first year would cost you 10 grand, right? 1% of $1 million, 10,000, probably your biggest expense, one of them, right? And so I think it's worth $239 to at least talk to Mark Zorel. or a member of his team. And how it works is a lot of it's all done online. So what you're gonna do, he uses a tool called eMoney Advisor. We've talked a lot about personal capital, or now it's called Empower, where you can connect all your accounts and it analyzes all your investments and analyzes your fees and your asset allocations. It's a tool I use. I like it a lot. Well, advisors tend to use tools that are only available to advisors. One of them is called eMoney Advisor, and I've used it. It's actually what powers Fidelity's Full View, if you use that. It's not at all as user-friendly as Personal Capital is, but it probably does a lot more behind the scenes. But in any event, that's what Mark uses. And so you'll connect your accounts, and it uploads all your data. It can be your banking data, your credit card data, your investments. Now, it doesn't give Mark access to any of these accounts. He can't go in and take money out. But it shows him your asset allocation, how your money's invested, how much you have. And then from that, he can do an analysis, and then you'll have a Zoom call with him or a member of his team. And you can walk through whatever your questions are. How do I invest? When should I take Social Security? Should I have long-term care insurance? How will this affect my Medicare premiums? Whatever the questions are. Should I buy an annuity? Maybe you have a pension and you're trying to figure out, do I take a lump sum or just take it monthly? Whatever the questions are, he can walk through them. In terms of the investing, the primary way he does this is he'll say, look, this is how I would recommend you invest your money. He'll be very specific. This mutual fund or this ETF. He's a big believer in index fund investing and keeping things simple, which in part means having as few funds as possible. And of course, you don't have to take his advice. You can listen to him and say, Mark, I appreciate it, but no thanks. I'm going to go pay an expensive advisor to manage my funds for me. But I think it is worth the $200. I keep looking at my computer screen. It's like I don't believe the number. $239 the first year. After that, it's $8 a month if you want to keep using him. And you can have a yearly call with him twice a year, whatever. That's what I said to my friend. It's what I would say to my wife if she were going to manage our investments. I think it's a good source, even if you end up deciding to get other help from someone else. Now, I have a page on my other site, robberger.com, that lists a number of what I think are low-cost, sort of fixed fee or flat fee, hourly fee financial advisors. I'll leave a link to it below the video and in the show notes to this podcast. Rick Ferry's on there. He's big in the Boglehead community. John Luskin, I was on a panel with John at the Boglehead conference in Chicago last year. So a lot of choices there. I don't have any financial interest in any of them. None of them have paid me to be on that page. I don't get any money. I wish I did. I don't get any money from any of them. But I would highly recommend, if you're trying to figure this out and you're nervous, you don't want to do it on your own, or maybe you're not nervous, maybe you just don't want to do it on your own. You want some help. All right. Pick one of them or some other fixed fee, flat, hourly financial advisor to get some advice. If you would end up with a 1% AUM, 1% of assets advisor afterward, that's the choice you've made, but at least you've made the choice informed. And so that's what I told my friend. And that's what I'm telling you. That's what I would do, or what I would hope my wife would do if she needed help. Now, by all means, do your due diligence. Even if it's someone on my list, you've got to do your own due diligence. Make sure you're comfortable with this person. If you're not, don't use them. And that's true with Mark Zoril. If you're not comfortable with him or his company, don't use them. Find someone else. But that 1%, it's going to kill your retirement. I mean, studies have shown, if you think you can spend 40 or 45 grand for each million, like using something like the 4% rule, trust me, it's going to shave a lot off of that 1% fee. It doesn't seem like much when you say 1%, but when you put a number to it, multiply that 1% by your investment total. If it's $1 million, that's 10 grand. That's when it starts to get real. That's when you start to say, hello, that's a lot of money. Remember what I say, friends don't let friends pay high investment costs. It's just not good. So there you go. That was the advice I gave the friend. That's what I'm telling you. That's what I would hope my wife would do. And there you have it. So that's it for this week's podcast. By the way, as I mentioned, this gets published on YouTube as well. I have two YouTube channels. The Dough Roller channel, you just go in Dough Roller Money Podcast in YouTube, search it, find it, subscribe to it. And then just search by my name, Rob Berger. Rob Berger. I have a second channel. That one's actually much bigger. I think surpassed or close to 125,000 subscribers. That one's focused almost exclusively on retirement and investing. This one is more general personal finance. We talk about a lot of different topics as we did in today's show. Maybe you subscribe to both channels. I also send out two different newsletters, the Dough Roller newsletter and the newsletter associated sort of with Rob Berger and the retirement and investing. I'll leave links to both channels and both newsletters below this video and in the show notes. You can check that out if that's of interest to you. And there you go. Listen, hope you have a great week. And until next time, remember, the best thing money can buy is financial freedom.